Hello and welcome to this video. So in this video, I want to look at NVDA. NVDA has been going up. If I show you the daily chart, you can see since forming a low in mid-October, it's been steadily moving higher. So I just wanted to see whether this is a real deal or whether or not we're likely to see more selling and new fresh lows. So in order to understand that, I want to look at the monthly chart just to see what is the monthly chart telling us. So you can see that NVIDIA, since the COVID low, so this is the COVID low. If you look at the weekly chart, so COVID low was the last big drop off in NVIDIA, and since then it started this monster rally. So if I go back to the monthly chart, so you can see from here it had a massive run up. During COVID low, the price fell to as low as 45. From 45, it went all the way up to 360. That's a massive move. And in the monthly chart, you can see that because of this rally, it had gone way above the monthly 20 and monthly 50 period exponential moving averages. You can also see that from the last rally that started, MACD started to go higher. And it also went way above the zero line. During this rally, RSI also went way above. RSI reached as high as 88. All of that. So you knew that when the price was up there and it was significantly above the the moving averages, it was stretched to the upside. And there was some kind of a valuation adjustment that needed to happen to bring all of this in line. So we want to understand whether this adjustment that has taken place, how does this adjustment compare to the previous times when we saw this kind of ramp up, euphoria, whatever it is you want to call it. So let's just look at what happened. So this rally that happened, it has corrected 78.6% of this move from COVID lows to the high earlier this towards the end of last year. So I've got a fib here from the COVID lows until the market high in late November. And this correction is 78.6% of it. So if I look at the weekly, so you can see it's from this COVID lows. And this is where it bottomed. And then it's now making a push to the upside for the time being. So that's number one. Point number two is that this correction has pushed it below the monthly 20 and monthly 50-day exponential moving averages. So that's point number two. MACD has crossed, and MACD is now moving lower, and MACD is now heading towards the zero line. RSI has crashed, and RSI has fallen below the 50 level. 50 level is right here, and it's just moving up again. It's at 47.63, so it's below the 50 level. Now 50 level is quite important because last time when the rally started, it started from the 50 level, RSI 50 level, and whenever RSI stayed above the 50 level, good things happen. And then when it started dropping and finally fell below the 50 level, then obviously the momentum RSI was in a negative territory. So those are the current scenario. And see whether or not how do these stack up based on the previous times when we saw this kind of ramp up and then correction. So if I move to the left, you'll see that, okay, so here is another period when we see price ramping up, and it had gone way above the monthly 20 and monthly 50 moving average. So one thing we see that when it dropped, it fell to the monthly 50. And then it bounced to the monthly 20 and then pulled back to retest that monthly 50 again. Now you see that when this rallied, the gap between the monthly 20 and 50, which was quite narrow here, started to widen. And this consolidation basically narrowed it. So at least we see that it touched the monthly 50. Okay, so that's point number one. Secondly, MACD was also quite high, and MACD started to move lower, and it turned when it came to the zero line. See, in this correction, MACD never fell below the zero line. MACD came to the zero line and crossed and then started to move higher. When it crossed and started to move higher again, look at what happened to price. We saw massive rally in price again. So what was the correction here? So if I draw a rough fib, so I'll just draw a fib from this level. So if I draw a fib from here to here, I see that this correction was 61.8% of this move, roughly. So this correction was 68.8. The current correction is 78.6%. So current correction is well within this. So compared to the previous correction, you might say that it has done enough compared to this this level. Now, so that's from a percentage decline, but from a pattern point of view, you can see that it spent a number of months between the daily 20 and 50, and it tested the monthly 50 a couple of times. And the other point was it basically came to the zero line, and that's when the monthly that's when the MACD crossed. So where are we in relation to that? Well, so the MACD is falling, so I'm going to get rid of this fib. So we know that this correction was 68.1% of this move. So you can see MACD has started to come down, and it's now approaching the zero line. Now, previously, when it came to the zero line, this red line started to curl, flatten out, while this purple line came, and then they crossed and then started to move higher. So are we there yet? No, the monthly MACD is still going down, but looks like the gap between the two is starting to narrow, because you can see the histograms are getting smaller. So and the other thing what we noticed right here was that it spent quite a bit of time between the monthly 50 and 20, and it retested the monthly 50 a second time. So does that mean that now that we're rallying, it's gonna kind of stall at the monthly 20, the yellow line? Where is that? It's around 170, 176, let's call it. So does that mean that it's gonna stall there, and then we're gonna get some chop between the monthly 20 and monthly 50 for some more months until MACD comes down further, and eventually the purple line comes down further and meets up with the red line near the zero line, and then they curl and turn up. So, and that might take several months. So it's entirely possible for NVDA to chop around and possibly even retest some of the lows, because we saw that it came back and retested the previous low a second time. So does that mean that now that we're rallying, we're going to get another leg down and retest this level, and all of that consolidation is going to help bring MACD, the purple line lower, and eventually they're going to cross. But net, we need to see it cross. We need to see it cross and start to move higher. Until we see this cross, we cannot be sure that this rally that we're seeing can be sustained. Because in order for us to see this rally sustained, in order for us to see monthly green candles making higher highs, we need to see a cross of the MACD, and that hasn't happened yet. But it is approaching a zone where it could happen. You know what I mean? So it could take a few more months before that happens, while the price kind of chops around. What about RSI? So RSI right now is near where the previous bottom happened. It's near with this purple line. So, but it fell, then rose, and then it fell, and then it finally crossed above the 50 level. This is the RSI 50 level. So right now we're below the 50 level. So we need to see it move above the 50 level. But it has pulled back to the previous lows right here. So it looks like RSI is within the vicinity. But you can see that it spent some time. So the question is whether RSI is going to spend some time here while MACD completes its thing. So, but RSI is now close to the previous low. Now, if we look back to another time just to see Right, so this is another time where you see that it had ramped up quite a bit, and then there was a big decline. So let's have a look to see how big of a drop this was. So if I draw a fib from this level to this high, this was 88.6. This is another fib level. So it had corrected 88.6% of this move. So again, it found support at the the current fib is at the 78.6 level. This correction basically corrected 88.6% of the move, and the one in this is 2018. This was 61.8. So this correction is a little bit deeper, but that's because this happened in 2008. That's when, you remember the global financial crisis, when the bottom fell out in the US economy, and S&P 500 was down over 50%. So you can understand this massive decline. And at that time, you can see MACD had fallen below the zero line. I think that's because MACD was falling from a lower level. Because if I move to the right, you can see the MACD in 2008 was well above this level, and in 2022, MACD was even higher. So in here, because it was falling from a higher level, it didn't fall below the zero line. But here, because MACD was falling from a lower level, it ended up falling below the zero line. So that's the difference. But because it fell below the zero line, it took quite a bit of time for it to get back above the zero line. So you can see it crossed right here, but it didn't actually cross above the zero line until here. And that's when we started to see a ramp up. So 2008 correction, basically, even though it moved higher, but it chopped around for a number of years. And then when finally, because MACD was below the zero line. But over here, because MACD never fell below the zero line and it crossed just above the zero line, it then started to move higher. But nonetheless, in here, we did see that the correction was quite deep. But only when MACD crossed and started to move higher, we saw price started to move higher. And where was RSI? RSI fell slightly below this pink line right here. So this is 38.2 level. This is one of the fib level I use. So it fell just below that level. It stayed in this level for a while and formed a base. So bringing all of it, so I'm just going to get rid of some of this. So bringing all of those together, it looks like the correction that we see, 78.6%, is deep enough compared to previous other corrections. But it looks like based on MACD, the cross is not going to happen for another few months. If it does cross at the zero line, so it looks likely that we can see some chop between the monthly 50 and monthly 20, and we can't even rule out the possibility of a retest of this level, or at least a higher low. So it can chop around. Maybe this is the bottom, but we might not get a sustained rally until we see a crossover in monthly MACD. RSI looks like RSI also needs to get back above the 50 level. Looks like it is in the vicinity of previous corrections. Maybe it can chop around and form some sort of a base while price consolidates further for a while, and eventually MACD makes a cross. And once it crosses and starts to move higher, I think that's when we can expect sustained monthly rallies. Like these are monthly candles. You can see monthly green, 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 green. In order for us to see that, we need to see a reversal. We need to see this decline stop, cross, and move higher. But in terms of pullback, it looks like it has done enough based on previous corrections. It might just have to chop around, maybe retest this one more time before this finishes its thing, and then we can expect the rally. Well, that's all for today. Thank you very much for the video. If you like it, please consider subscribing, sharing. Thank you very much.